This Saturday on 8th November, double the insights, double the growth. By 11 a.m., we have group health cover versus personal policy. Why you need both. Know why you need both the insurance to keep your family protected. At 12 p.m. IST and 10:30 a.m. GST, we have smarter wealth creation for NRIs. Learn how to make your money work beyond borders. Link in description. Join this webinar to make your weekend an actual learning weekend.
We have done 2 years and 2 months. So in 26 months, this portfolio, which started as an equal weighted stock index of 10 stocks, has grown quite well. $1 lakh invested on 31st August 2023 has grown nicely to 1,63,701. If you put the same money in the Nasdaq index, $1 lakh would have become 1,66,924. The AI boom in the last 6 months has caused a massive surge in Nasdaq, which has obviously trumped our strategy in the last 6 months. But prior to that, we were actually doing better than the Nasdaq index. But when compared to the MSCI World Index, we have done much better because the MSCI World Index in 26 months has made only 47% return. I mean, I shouldn't have used the word only because the returns are quite significant. The best performing companies in the US Boring Index during its entire journey are Netflix, which has returned 158%, Meta 120%, Alphabet 107.6%, Costco 84.6%, Amazon 77%, SAB India 62.5% and Apple 45.2%. These are the performing stocks. Now to the laggards. 2 stocks have done very badly. Crocs minus 16.1%, Starbucks minus 13.3%. One stock has had a very muted performance, 10.8%. So now on 1st November, I am making 3 changes in this portfolio. The stocks that are going out are SAB, PayPal and Starbucks. For the first time in the history of this portfolio, after 26 months, I am making 3 changes in one go. For those of you who are new to this boring stocks index concept, one time in a calendar year between January 1 and December 31st, I can make changes. So, I am exercising this calendar year's opportunity to make the first change. So, 2025 November 1 is the first change in this index. What does this mean? I am leaving some headroom to change the portfolio further next year in 2026 if required. So, 3 stocks are going out. I am sure you are very curious about what are the stocks that are coming in. So, we are replacing Starbucks, ESAB and PayPal with Uber, Pepsi and Kava. These are the 3 companies that I am bringing into the portfolio. Clearly, this portfolio is a mix of some FANG stocks and some stocks which are consumer franchises. But I believe that over a period of time, I will morph this portfolio into one that has a higher consumer franchise than it does even today. Actually, even today it has a very high consumer franchise, but if necessary, I will make it even more consumer facing. So, now the new portfolio is 10 stocks, Crocs, Uber, Amazon, Alphabet, Apple, Pepsi, Kava, Meta, Netflix and Costco. The only company I think which has a lesser direct consumer orientation is probably Alphabet. So, this portfolio is already heavily consumer oriented, but let's see what happens to this portfolio from here. Now, there are few things which you must remember about this portfolio. I have not sold some of the winners, which means that even though the valuations are higher, I am letting them run. I am selling some stocks where I feel that there could be potential weakness, or replacing them may make better sense. Clearly, I want to flag that the changes I am making are a gamble, because I am not expecting a miracle in the stocks that I am selling. So, I am hoping that the new stocks do marginally better than the old stocks. So, essentially this portfolio is going to rely on continuity, more on continuity than on change. So, that is the principle that I am applying in this portfolio. Now, let us see what happened in the last 1 month in this portfolio. In the last 1 month, if you invested 1 lakh on the 1st of October in Nasdaq index, 1 lakh would have become 1,04,280, 4.28% return. It is evidently higher than the 3.67% return which the Nifty 50 gave in this month. So, Nasdaq has done extremely well even in October. In contrast, our US boring index has not done as well. It has done only 1.85% returns in that month of October. So, 1 lakh has become 1,01,849 rupees. So, what contributed or failed to contribute to performance in October? Let us see the laggards in this portfolio in October. Crocs minus 3.9%, Starbucks minus 4.2%. And then you have Meta minus 9.6% and Netflix minus 4.4%. These are the 4 stocks with negative returns. Costco has barely done anything, just 0.5% positive returns. And then you have PayPal 3.9% positive, but it is now going out. ESAP 4.9% positive, it is also going out. Apple 5.8% positive returns. So, the companies that did well in this month are Amazon plus 10.7% and Alphabet 14.7% in 1 month. So, clearly you all know what happens in a portfolio like this. You will have winners, you will have losers, and you will have companies that do not do much. The important thing is for the winners to more than compensate for the losers' performance, and the companies that do not do much being smaller in empirical numbers. Suppose you have a portfolio in which 6 companies do not do well and 3 companies do badly, that one company cannot compensate for all of this, definitely not for 3 bad companies. So, that balance is very, very important. Here we do not make too many changes, so that balance is something that should be well thought through when you curate the portfolio. You cannot do it as you go along. So, that is the real challenge in the US boring index. The Nasdaq has been driven heavily by the current boom in AI and semiconductor. We have very little in semiconductor, so that has been a problem for us and it has not helped our portfolio. And some of the consumer facing businesses which we bought are not doing well. So, not owning the big winners and owning companies which are not winners or which are actually being losers is affecting us in this portfolio. Let us see what happens going forward. We have just made 3 changes. And I am sure even these changes are going to face initial challenges, but I have started this portfolio and held it steady for 26 months. So, I am playing the long game, the long haul game. The whole idea is to learn how to invest in companies and make each company a very big position in one's portfolio. So, what I am doing here in this exercise publicly is something that also goes into my personal portfolio. I take these learnings into my investing, I take my investing into these public portfolios, and there is an open and healthy and a transparent discussion on this, so that we all learn together and grow. Stay tuned and keep watching the US boring portfolio on my channel. Thank you for watching.